This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia Shenoy, and joining me on Bazaar is Prashant Nair and Nigel D'Souza. Folks, morning. Today is Raksha Bandhan, so happy Raksha Bandhan to everyone celebrating. And today actually kickstarts the long, months of festivities, right? Raksha Bandhan, and then you enter into Diwali, then there's Christmas, and there's Ganpati in the middle.
Right.
So, is your Indian attire ready?
Yeah, my Indian attire is ready, and wishing all our viewers very happy Raksha Bandhan. But I think the Muhurat or the auspicious time is 8 to 9.
Yeah.
I think I'll be tying it a little earlier, so, because the kids as well will celebrate. So, lovely, good times. Yesterday we had Onam, today we have Raksha Bandhan.
Yes, and more than tying, I guess, it's the gifts that come.
Yeah.
I'll be getting it, but
I'll be giving it. I'll be giving it, yes.
No, nowadays the gifts are both ways, right? Are they both ways?
No, they're not.
No?
My sister gives me throughout the year, so I'm lucky. So only on this day at the birthday I have to give.
I'm looking forward to my gift. I don't know if you guys get gifts or not, but I definitely get a lot. So, but yeah,
lovely day.
Absolutely. It's an auspicious day, and it's a beautiful festival. Well, let's just quickly run you through what you need to know as we start another trading session. Then let's start with yesterday, right? Yesterday was like day before yesterday, which is that it was indecisive, and it was inconclusive, and there was not very much to go on, right? Most of the day, the market kind of spent flitting between trying to take out these resistance levels and trying to kind of hold on to lower levels as well. So inconclusive and indecisive is what we had in terms of yesterday's session. Overnight action has been positive, though. So the Nasdaq actually ended up about 1.7% or so. The S&P was up about 1.5%. And the reason, the thing which catalyzed this move is basically weaker U.S. economic data, which basically pushed Treasury yields sharply lower. The 2-year lost 12.5 basis points. That came in at about 4.8%. The 10-year lost 9 basis points to 4.12% as well. So these are very sharp corrections that we've seen. Consequently, the dollar index sold off about almost 0.5%. We were basically looking at 104.5 kind of levels, and we've lost, we're back to 103.56. There is more data ahead. So, the job openings number, the conference board consumer confidence, those are the two numbers that we got yesterday. Those basically nosedived. And that kind of raised expectations that maybe the Fed will be on hold and the economy is slowing as desired. But it needs to be we need to watch two other data points this week. So on Thursday, we get the core PCE, which is a measured inflation indicator for the Fed. And then on Friday, we get the jobs data, which is, of course, the big payrolls number that we get. That's a monthly number. And I think that will, once again, if they are soft, if they're weak, I think it'll reinforce expectations that, you basically will have, we won't have, the Fed going once again, starting raising rates and trying to find where perhaps they need to stop finally at. Just consider this number, just to come back to our market. Post-Jackson Hole, the Nasdaq is up almost 4%, whereas the Nifty is actually absolutely flat. I've taken only 2 days worth of change for the Nifty, which is Monday and Tuesday, because the reaction for us was on Monday morning. But for the US market, that's Friday, Monday and yesterday, overnight. So, you basically have almost a little over 3.5%. So you're, at least in the very near term, perhaps running a little slower as compared to the big market, which is the US. Now, let's just come to the levels here. I said this, on Monday. I started by saying that perhaps, a little more confidence starting to come back after a little bit of sideways kind of price action, but need to watch. We're not clear and we're not kind of, cross the hurdles. So the first one is for the Nifty is 19,369. That is nothing but the gap area. So if you remember, between last Thursday and Friday, the market sold off dramatically. So the lower end of Thursday's trading session is 19,369, and that's the gap area which the Nifty needs to cross. Most likely, it's 20-25 points away. You need to go above it, close above it. Intraday, we did cross it. So that's the first number. The 20-day moving average, because the market's not been doing all that much, has also moved lower. That stands at 19,452. That's the second resistance level. And on the way down, The Nifty should not break the low of 19,230, which again, after 2 or 3 days, it's not very far away. Perhaps it will be further away with today's session. So that's where we are at on the index. Now on the Bank Nifty, that's faced selling pressure at the 40-day exponential moving average, which stands at 44,560. We closed at 44,500, right? So again, it's a first very near-term kind of level. You need to close above it. The next levels for the Nifty Bank are the same that I put out yesterday. These are retracement levels from the July high to the August low. The 50% is 44,985. The 61.8% retracement is 45,312. These are again not very far away in that sense. And on the lower side, perhaps you can use 43,984 as a bit of a support. The implied open will come up on your screen, and I would still say test the waters with kind of small positions and see and test the strength of the market in terms of whether it wants to hold on to high levels, it's able to hold on to or not. And once some of these levels are taken out and we get a close above it, I think it'll give you better, more confident kind of entry points and opportunities. Sonia.
Absolutely. And, it's the same situation of sort of bad news is good news kind of situation in the US markets, right? We had a really strong day. And if you look at what happened overnight, it's been the third straight day now of gains on Wall Street. The Dow was up almost 300 odd points. And if you look at the data that came through, the US Consumer Sentiment Index, as we spoke about it earlier as well, it signals that the economy is slowing down. So the index came in at 106.1. The expectation was 116. And if the economy is slowing down, perhaps the Fed may not go ahead and raise rates further. So that is something that boosted the US markets overnight and markets across, many other parts of Asia as well. In our own markets, both foreign and domestic investors bought in the cash market, small amounts, 60 crores, 305 crores. But nevertheless, the cash market flows were positive. The Nifty has been consolidating near that 50-day moving average, around 19,340. So it's important to see if, that level gets scaled up or not. For now, the starters, it seems like there could be a positive opening. I just want to talk a little bit about the Midcap outperformance, because in the month of August so far, if you look at it, the Nifty is down 2%. The Midcap index is up almost 2.8%. But the quality of stocks that have gained, raises questions about euphoria in the market. So just look at the quality of stocks. There's HCC, which is up 40% in this month. There's Bajaj Hindustan, which is up 46%. There's JP Associates. There's Suzlon. There's Alok Industries. So you just want to take a step back in the mid-cap space, be a bit cautious, because the profile of stocks, raises a bit of questions about euphoria. But other than that, this market looks like there could be a little bit of green. There's a lot of data coming through. There's GDP data. There is auto sales as well. So we have our hands full.
Well, that's right, Sonia. Today, the sense you get is maybe we have the ingredients in place to have a really good trading session. Let's see how that works. I'm not saying go ahead and buy the gap up, but maybe buying on dip could work today. You have a softer dollar out there. You have the yields that are lower as well. And these are both equity market positive. Remember, we have expiry that plays out tomorrow. And the rolls that I'm looking at, the rollover positions, are on the lighter side. So we have today and tomorrow, but it appears there's plenty of action still left in this series itself. Now, the Nifty is likely to open up higher. You'll want it to go ahead, conquer the 50 DMA and trade above that. That's the first target in the first hour itself. The breadth of the market is very, very strong. I was just looking at the NSE 500 stocks, and technically they're so strong because more than 80% of them are trading above the 200 DMA. That's telling you the kind of breadth that we have in this market, extremely strong. Now, the FI positions in the F&O market, well, for the second day running, they added close on 2 long positions for every 1 short position. And in 2 sessions, they've added more than 30,000 contracts on the long side. The short positioning has, the addition is not as much. So that's why from the end of last week, you had the short positions at close to around 60%. That's gone down a little bit to around 55%. I'm looking at 2 strikes now on the Nifty. The 19,400 call that was active, added more than 20 lakh shares. The premium there was around 30 rupees, but on an average during the day, it was around 35 to around 40 rupees. While on the downside, the 19,200 put, well, that as well was fairly active. The premium in that vicinity of around 23 rupees or thereabouts. That brings us to the levels then. Since we had writing at the 19,400 call, the 20 and the 50 DMA, they become the bit of a resistance zone. So first you look at the 50 DMA. If that crosses, then you're looking at the 20 DMA. On the downside, the recent low is the near-term support zone. The Nifty Bank options data as well should come up for you on the screen. I'm just looking at 1 strike. That's the 44,600 call. Remember, the Nifty went ahead and almost tested the 45,000 odd mark, but we couldn't hold out there. Now, today is a good chance that we go ahead and breach that mark, the 44,700 odd mark, that becomes a bit of a resistance zone. And we have the 50 DMA in that vicinity, while on the downside, the 20 DMA as well. GIFT Nifty suggests a 70-80 point gap up. Don't go to chase the open, but maybe, just maybe, if you buy the intraday dip, today could turn out to be a bit of a catch-up session for the Nifty, as well as we could have some green on the screen. So now.
Okay, we could have some green on the screen. The bulls would definitely like that. Before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Dean Kim of William O'Neill will be with us. And we'll also talk, of course, about the global trade setup. Our research team will also bring you CNBC-TV18's list of top 10 stocks. At 8:30 a.m., a fundamental stock analysis with our market expert, Prakash Diwan. But let's very quickly talk about some money market calls that are coming in this morning. Kunal Sudhani of Shinhan Bank says the US dollar sharply declined as US Treasury yields stumbled following disappointing employment data from the US, including the JOLTS report and lower than expected numbers from the Consumer Confidence Index. He says all eyes now remain on the US non-farm payrolls data. For the dollar INR, 82.40 acts as a support while 82.80 is a resistance.
Okay, on bonds, we have Neeraj Gambhir of Axis Bank, who says that the 10-year benchmark bond yield traded in the range of between 7.16 to 7.2% last week. He says at the start of the week, bond yields hardened on the back of higher U.S. Treasury yields. However, he says weak global PMI prints led to easing of yields during the week. He says that strong receiving at the 5-year overnight index swaps around 6.75% and relief rally posed the Jackson Hole Symposium also supported softening of yields. He's expecting the 10-year benchmark bond to trade between a range of 7.15 to 7.25% for the week. Okay, Dean Kim is now joining us. He's head of global research product at William O'Neill. Dean, good to have you with us here. Thank you very much. I was just pointing out that the NASDAQ is up almost 4% in the 3 days of trade post the Powell speech at Jackson Hole, whereas the Nifty is absolutely flat. How are charts looking here in India? I mean, if you've taken a look at the Nifty and other indices, no problem for the small cap index, which continues to do very well. But what about the Nifty and the Bank Nifty?
Yeah, I look at the sensex and, right now, obviously, it's trading below the 50-day moving average. And next support is at the 100-day moving average. So it's about 2% away. So I think it's important that the index retake the 50-day moving average. And then after that, resistance would be, currently resistance is 50-day moving average, but resistance after that would be the recent highs. I think that's stemming from weakness that we've seen in Asia. So particularly with China reporting such bad numbers. Obviously now they're trying to, implement some stimulus. And so we are seeing some positive reaction within Asia. For example, just today, we turned Hong Kong to confirmed uptrend. They had a follow through day. And then a few days ago, Japan had a follow through day. And then coincidentally, yesterday, China announced some stimulus in terms of lowering stamp duty taxes on stock trading. I think the market is waiting for them to come up with more fiscal stimulus, which is going to be very important, given areas like property markets in China in trouble. So hopefully we're going to see some of that come through. And when that happens, I think rest of Asia will follow through as well. Now in the U.S., it's a very interesting day today. We've had a couple of weeks of concern as indices were about to test the 100-day moving average, but U.S. market had a very good day with both S&P and NASDAQ rising above all key moving averages once again. So we put the U.S. market into confirmed uptrend today as well. And we had a follow through today with very strong volume. Pretty much all sectors rallied, in particular technology, retail, healthcare, outperformed more than other sectors. Small caps rallied hard as well. Obviously, the key reason is, basically we saw July's new job opening numbers coming in lower than expected, and consumer confidence reported for August coming in lower. So in this case, bad news is good news, and perhaps the market is contemplating the Fed's thinking, hawkish thinking, and they may reverse going forward. So we'll see what happens. But now it's important for the indices to hold support at the 50-day moving average and not immediately retreat back down below it. So I think, tomorrow and the next day is going to be very important.
Got it, got it. Dean, for our own markets as well, the last time we chatted with you, you said that the Indian markets is in a confirmed uptrend as well. But, since then, the market has stalled a bit around this 50-day moving average. How are you feeling about that? Do you think there is more upsides in store?
Yeah. Since we spoke last, we put India market in under pressure. So when it broke the 50-day moving average, we did put it under pressure. But we are seeing still, as Prashant mentioned, the breadth is very good. So a lot of sectors are participating, providing with some good ideas. We're finding, obviously, there are stocks that continues to rally and look extended. So given this environment in terms of the market being under pressure, I would place some caution. And when a stock is above the 200-day moving average by about 40-50%, and you see some distribution heavy selling, you ought to be trimming position, and then take some of that and look for stocks that are coming out of early stage basis. So some of the areas that are popping up now, like Astral and consumer cyclical. I think last time I mentioned Sona, Precision Forging, TVS Motor, EIH. Those are all sort of in the consumer space. And then in financial space, Manappuram Finance, IIFL, and even in healthcare, Cipla and Alchem. Those are some of the names that are kind of setting up or trying to break out from early stage basis. So I would focus on those types of names.
All right. Hi, Dean. Good morning. What about IT? In the past, I think you were talking about Coforge out there. How are things looking?
In terms of IT, I think still Dixon Technologies look good. Unfortunately, we still need to be patient on the bigger cap names like Tata Consultancy or Infosys. Although in the US, I am seeing some improvements in those IT service providers like Cognizant, Accenture, and so on. But so it's only going to be a matter of time. But I would stay patient for the large cap IT names.
Okay. And in the banking space, any thoughts? I mean, there has been pressure on names like HDFC Bank, which has been one of the biggest laggards, right, this year. SBI is also down about 10% from its recent highs. Do you see the trend turning there?
Yeah, it's sort of disappointing to see one of the major banks sort of under pressure, but there are other banks that are doing well, like Federal Bank. It's setting up well. I think IndusInd Bank, it continues to hold up well, and then ICICI. There's a lot of smaller cap banks, like Camden Homes and so on. They have done very well, but they're probably too extended at the moment. So I would focus on larger cap, but HDFC has a bit of ways to go. So be patient on that one.
All right, we'll leave it at that. Thanks a lot, Dean, for joining in, and appreciate your time here on CNBC TV18. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to give us a list of top 10 stocks. Stay tuned. Welcome back to Bazaar Morning Call. Well, this morning, the GIFT Nifty is indicating a good start because, you had positive global cues. It's been third day running now that Wall Street has been up and about. And our own market's not too bad, hanging around that 19,350 mark. Our research team is with us to help you with the list of top 10 stocks as we begin the day. Zomato has been in the news for a while now. So Nimesh is getting ready for the link. So we'll go across to him in a bit. In the meantime, I think Abhishek is waiting by. Okay, Nimesh, over to you. Are you ready to tell us about Zomato?
Well, so I know there's going to be a large block in Zomato today morning. SVF Growth Fund, which is SoftBank, they're looking to sell 10 crore shares by a block deal, which is nearly 1.17% of the company's equity. The indicative price is 94, which indicates a marginal discount to yesterday's closing price. So I'm guessing the block will get executed in the pre-open block window today. There is a 45-day lockup after today's block deal. So SVF Global, as of June, was holding close to 3.3% stake. So they'll be left with another 2% to sell after 45 days from here on. Interestingly, there is a note on Zomato as well from HSBC. They've today raised the target price on Zomato to 120 from 102, and they believe that Blinkit, which is which now they value at $5 billion, that could become a larger company than Zomato itself in the years to come. So a large block to start with in Zomato and an upgrade as well. So I'll go with green as far as Zomato is concerned.
Okay, all right, Nimesh, thanks for that. Well, let's hop across to Abhishek. Abhishek is looking at the cards data that came. So SBI cards is in focus, and also SBFC delivered their first numbers. Morning, Abhishek.
Morning, Nigel. So begin with the SBI cards. YOY numbers are strong. However, month on month, it looks like it's on the weaker side. So credit card data for the industry, total card issued is up 12% YOY and about 1.34% month on month. The spends are up nearly 25% YOY and about 5.5% month on month. Average spends, if you calculate, it's up 11.5% YOY and about 4% month on month. So for SBI cards, the data shows that card issued is up 20.75% YOY and about 1.2% month on month. In terms of card issued, they have lost market share on a month-on-month basis. So spends are up 34% YOY and about 4% month-on-month. Even the spends market share, that's down by nearly 30 basis points on a month-on-month basis. Average spend is up 11% YOY and about 2.7% month-on-month. For SBFC Finance, it's the first quarterly numbers post their listing. The AM growth is pretty robust over there, growing at nearly 47% YOY and about 7.8% quarter-on-quarter. Asset quality has remained stable. Gross NPA ratio is down by about 3 basis points on a sequential basis. Net interest margin have come under pressure, decline of 40 basis points both YOY and quarter on quarter. However, the spreads have improved both YOY and quarter on quarter. So NII growth is nearly about 44.5% YOY and about 4.5% quarter on quarter. Stable asset quality has meant that they have delivered a PAT growth of 46.5% YOY and about close to 10% quarter on quarter. Back to you.
Okay, thanks a lot for that. So healthy quarter over there. But let's go across to Surbhi. She's looking at some more stocks that are in the news. Surbhi, what do you have?
The first one on my radar is Jupiter Wagons. The company is going to consider a fundraise on September 5th. GR Infra Projects is next. The company's arms have executed a concession agreement for projects worth 1457 crores with the NHAI. MPS Limited, the company is going to acquire 65% of Liberate Learning, an Australian-based company, for 9.32 million Australian dollars. The remaining 35% of the shareholding will be acquired in tranches. Strides Pharma, the company has approved a corporate guarantee for 135 crores on behalf of its associate company. And lastly, Make Money Organics. CRISIL has downgraded the outlook on its long-term loans from stable to negative, but the rating remains the same.
Okay, all right. Thanks a lot for that, Surbhi. Well, let's hop across to Manisha. Now she's joining in to tell us about crude oil prices, which bounced a little bit overnight. Manisha, morning.
Morning, and thank you for that, Nigel. Well, yes, a percentage point of gain overnight, and we are back above 81 and 85 for the both varieties. Well, the U.S. crude stocks show a decline of 11 million barrels. Market was working with a number of 2 to 3. So versus that, 11 is a big number, and we're seeing support because of that. The U.S. rig count also fell for a 9th straight month in the month of August. There also is a decline in U.S. dollar because of the cooling in U.S. consumer confidence numbers and the labor market as well. And the street also is taking in some premium from the fact that the Hurricane Idalia may disrupt production along the Gulf of Mexico. It is going to be about the second quarter U.S. GDP numbers that come in today. So ahead of that, some choppiness, but overall strength continues for crude.
Okay, thanks a lot, Manisha, for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Zomato, SBFC Finance, Jupiter Wagons, GR Infra Projects, MPS, ONGC and Oil India. While stocks with negative news flow, there's Strides Pharma, Make Money Organics and SBI Card. But let's hop across to Reema now. She has some brokerage notes that she's going to focus on for the day. Reema, morning.
Hi, good morning. Let me start with Piramal Enterprises, where Citi has downgraded Piramal Enterprises to a sell, cut the target price to 1,010. Two key reasons. One, the retail segment is competitive. Two, there are some early signs of concerns in unsecured lending. The other one I'm looking at is Hindustan Aeronautics. Now, the stock has been in a focus. It's been a multi-bagger, but Elara has gone ahead and raised the target price to 4,620. This is on the back of a new stream of export business from several countries, a surge in inflows, stable margins, sustained double-digit earnings growth. And finally, Hero MotoCorp, because yesterday the company unveiled Charisma XMR. This is a premium launch by Hero MotoCorp. According to UBS, it could add 1 to 2% to the overall EBITDA. Citi is bullish because of this premium offering. They have a buy target of 3,600, but UBS is still not convinced. They have a sell rating. They believe investor optimism on launches looks overdone, while risk to the core segment, the mass market segment, rises. Back to you.
Okay, well, thanks very much for that, Reema. We'll take a quick commercial break here. We come back, we'll be joined by Prakash Devan for some fundamental stock calls. A little later after that, we'll be joined by the management of Home First Finance. That's an interesting home finance company, and we will understand what's happening business-wise at the company. Stay with us. We'll be back in 2.
Welcome back. Hope you're having a good morning. Well, it'll be a good one for the bulls, actually. For starters, at least, the US Qs were positive overnight. You had the yields that cooled off overnight, and you had the dollar index that's softer. That explains why the SGX Nifty or the GIFT Nifty is suggesting that we're likely to start off with a green of around 70 to 80 points. But to help us out with a lot of analysis of a whole host of stocks, well, Prakash Devan joins us on the show. Hi, Prakash. Good morning. Prakash, let's talk about the top stock. I think it'll be in focus today, Zomato. Supply overhang is there, but it appears there's plenty of interest as well. How do you view the stock at around this 94 rupee odd mark?
Good morning, Nigel. So, finally, it seems like Zomato has cracked the code. All this while, the challenge was to kind of make it into a profitable business, at least visibly profitable enough And whatever they've done in terms of tweaking the unit economics by adding up that 2% platform fee and all, to rupees platform fee per transaction. That's kind of helping out in terms of making sure that it does what the market would expect any big business like this. But this whole optimism on Blinkit potentially becoming a far bigger play than what Zomato's core food delivery business is a little bit too soon to call, and to kind of play the victory song. It's going to be a while before all these dynamics kind of start settling in. What's interesting is that at this level, while you have large market investors exiting, you also have the interest from somebody else to buy off the block, which means there's a new set of expectations that's building up going forward. Which means the stock would probably start doing slightly better than what we've seen it demonstrate in the last 12 months. But I would give it a little bit of a pause. I'm not too excited about these changes happening overnight. They might take some time, and you will get enough time to kind of buy into these names once the path to profitability is far more sharply defined. I mean, there are far better turnarounds. For example, Paytm, which was the biggest laggard of all these new age companies, that's turned around so distinctly that you would rather put money there more decisively than a Zomato at this point.
HSBC is very bullish on Blinkit, right? I mean, they're saying that the current valuations of Blinkit are $5 billion and they're expecting them to report positive margins, almost 3-4% margins in the next 3 to 4 years. So I take your point that there is a lot of euphoria on some of these companies like Blinkit, but the stock has also run up substantially. Well, let's do one thing. Let's take another story on board. So we'll come back to you, Prakash, for your thoughts on this. Sources have told CNBC-TV18 that the compensation or subsidy not required by the OMCs on 200 rupees LPG price cut. Sapna Das joins in on the phone line with more details on this development. Sapna, what are you picking up?
Hi. So this has basically been doing the rounds since quite some time. I think a lot of people are looking for clarity whether this 200 rupees LPG price cut, there is going to be any compensation or any kind of a subsidy from the government. Now, what we are given to understand is that, that there is no requirement as such for that. This is pure play being done by the OMCs. It's the OMCs who are doing the price cut, and at least as far as the LPG as a product is concerned, they are very comfortable on that front, and hence, no kind of subsidy or compensation is required, at least at this stage. The government subsidy is going to be limited only to the 75 lakh new Ujjwala connections that will be provided. There's already an existing formula for that, so that will be worked out. Now, also the question arises that, what is the cost impact and stuff like that. Back of the envelope, it's very simple. If the 200 rupees cut per cylinder and 31 crore LPG consumers are there, this works out to somewhere roughly around 6,200 crores per cylinder. But, that's something neither here, neither there. It's not accurate to talk about such numbers.
Right. For the total, right? 6,200 crores, the total 31 crore number, Sapna, right? That's the impact.
Yes, Prashant, total for one cylinder. But this is something that I am saying. Government or, other experts are of the opinion that it's not proper to do these kind of estimates right now.
Go on, Sapna.
Now, yeah.
So just one thing. I just want to clarify one thing, Sapna. So when you say that the view is that no additional subsidy is needed, is the view that on LPG, oil marketing companies were already making an excess margin? That takes care of this? Or are we saying that, margins on petrol, diesel, etc., there was some buffer, so that will take care of this?
No. On LPG, companies have been comfortable for quite some time. So at least on that front, no support is required at this stage. And to answer the larger question also, what the cost impact is going to be, well, that is something that, they'll be assessed over a period of time, depending on what the sales are and, how the international prices behave. Those two are going to be the important guiding factors. So just to reiterate, the subsidy is only limited to the 75 lakh new Ujjwala connections that they're talking about. No compensation, no subsidy is required for OMCs as of now on this LPG price cut. LPG is a specific product that we're talking about, Prashant.
And you said one cylinder, right? This is on one cylinder, basically, one subsidized cylinder. 200 rupees, one subsidized cylinder. All right,
per cylinder.
Per cylinder.
Yes,
so,
per cylinder.
Do we know how many? I mean, what is the total impact going to be?
No, so that's what I was trying to answer. That on that front, also, I think some time will be required. Because it will depend on, what is the sales volume, what is the demand like, basically what is the offtake, and how the international prices are going to behave. Now, under these circumstances, when international prices come down by another 200 rupees, the net, the OMCs don't have to bear anything, probably. If the prices go up, then it could be a different situation. That is why the view is that government will assess, depending on how the offtake and the prices behave. But as of now, there is no requirement of any subsidy or compensation to OMCs on LPG particularly.
Got it. Thanks very much, Sapna, for that. Appreciate you joining in and important clarity coming through. Prakash is with us. Prakash, you heard Sapna run us through that story. Your thoughts?
So there's no reason why the OMCs will not take a hit. You could look at it either ways, Prashant. If everyone out of the 31 crore users were to avail of the one cylinder at least, that's what Sapna kept on repeatedly pointing out, that at one cylinder also the math works out to at 200 rupees is where the math works out to 6,000 crores. Now, that is a hit cumulatively which all OMCs will have to take. Right? I mean, they had a margin or a comfort in terms of, international prices being soft, but that takes away, the profitability or revenue potential of 200 crores. So, 200 rupees per cylinder. So, that's definitely going to impact the larger ones like HPCL and BPCL, which are far bigger in terms of the network of LPG users, are the ones that will probably take a hit. International prices have been soft. We've seen the impact on some of the industrial users like Gujarat Gas and all, where, that whole thing of pass-through of soft prices was seen in the last couple of weeks. And this could continue. But the point here is that it is definitely a shave off from the LPG revenue. And it will at some point in time, if it goes on for a slightly longer period, given volatility in gas prices, it will potentially impact the bottom line as well.
All right. You know what? Just stay on. We'll come back to you in a bit. We have a couple of companies that we're going to talk to right now. So what are your thoughts there as well? Home First Finance is the stock that we're looking at. Actually, the past 6 months were not too bad for Home First Finance. The stock is up about 13%. And, it was a strong quarter for the company. So we are going to talk to the management. The assets under management saw a good growth, net interest margins, asset quality was stable. Manoj Vishwanathan, the MD and CEO of Home First Finance, joins us now to discuss the business. Manoj, good morning and thanks for being with us. I want to understand what's the outlook on the asset quality, because it's been pretty stable this time. I mean, you've been holding your gross NPAs at 1.6%. How is the turf looking, and do you think this kind of stability in asset quality is something that you can maintain?
Yeah, overall, the asset quality, and the repayment culture in the country has improved over time. And post-COVID, we are seeing also customers becoming more serious about maintaining their track records. So asset quality should be stable, or it can only improve from here going forward. If you look at early indicators like the bounce rates, the early delinquency, etc., for our company and for overall industry as well, it's showing improvement. So we are feeling quite positive about the asset quality.
Hi Manoj, good morning. Manoj, what about the AUM growth? It was quite robust in the first quarter, and I think the outlook as well is fairly positive. Could you tell us what kind of a growth number are you looking at for this year? And also LAP as a percentage of the book, that's gone up. Could you tell us where do you see this number stabilizing at?
AUM growth has been strong, so we have been clocking 30% plus, on an annualized basis, and we expect the same kind of growth this year also. If you see the first quarter, also it has been fairly good, and it's all a function of how much we are disbursing. So this year, the overall disbursal run rate is running at about 4,000 crores. So if you kind of calculate back, we are expecting a growth of about 30% this year, and next year also we expect a similar kind of growth in AUMs.
Right.
overall strong growth as such.
So how much would it contribute, LAP, as a percentage of your total book? If you could give us a rough number.
So coming to LAP, currently we are disbursing about 15%. 15% of our disbursal is contributed by LAP. So on the AUM, we are seeing only 12% because it's just that is just a catch up. So at some point it will catch up to 15%. So that's a figure that we are comfortable with for the LAP contribution, and we intend to keep it at that level.
Manoj, hi, good morning. Investors, especially people who invest in financial services stocks, are pretty excited about the home first story. And I think it's been pretty evident. Just you said 30% we should be able to grow. You've earlier on occasion when you joined us said that we should be able to grow 30-35% for a number of years. That runway is there. I just wanted to understand: is there a is there a number where you get to and then it kind of starts to slow down, gets a little more tricky? Say for example, you get to 15,000 crores. Is after that it kind of gets a little more trickier, slower, and how does that? Because the earlier book also starts to run down, right?
That's true. So the running down part, the erosion of the portfolio is kind of fairly predictable. Generally, for most housing finance companies in this segment, it's in the region of between 15 to 20% a year. So that is a predictable number that does not change over time too much. So it all boils down to how much you can disburse, and that is a function of your distribution expansion as well as market share growth. So as far as market share growth is concerned, there's a lot of headroom for companies like us because currently we are at about a 2% market share. If you look at the entire country, so getting to a 5% is the first target, and probably a little higher after that. So that gives us a runway for growth, maybe for the next at least 5 to 7 years, and which is why we are fairly confident of maintaining a 30% or thereabouts kind of a growth.
I know they are completely different segments, and but I just want to kind of pose this to you. So we had the Piramal management with us at a panel on a panel discussion, and they said that on the unsecured side, we are actually months away from a bit of an issue. Unsecured personal loan, consumer loan segment. Now, housing loans completely different. Defaults are very low, historically speaking, as well. But is there any takeaway from that to the segment that you are in, Manoj, as you see it?
So this is something that we have seen historically in the personal loan or unsecured segment. There are cycles, and there are times when there is a lot of dispersal euphoria, on growing the book, etc. And then there is a cycle. Customers are not able to repay. We have seen that. As far as housing loans are concerned, the best test for the resilience of the portfolio was COVID itself, where we actually saw customers prioritizing the home loan, above everything else. So even at the peak of COVID, our NPS did not climb too much. And we also saw a very quick recovery from there. So given what we are seeing on the ground, customers are actually becoming far more responsible, as far as their home loans are concerned. We have a lot of stories on the ground where customers are coming back and making almost 8 to 10 payments which were overdue in order to retain their homes. So on the home loan side, we are actually seeing far more responsible behavior from customers.
Okay, just two quick questions from mine before we let you go. You said a 30% growth is what you're hoping to maintain in AUMs, right? That's solid, given the kind of market share that you have, just about 2%. So I'm sure there's leg room to grow. But are you entering any new geographies, and what are the demand trends now like in the home finance market?
We are already present, in 13 states in the country, which actually contribute to about 80% of the business in the country. So at least for the next 5 to 7 years, we intend to continue in these 13 states. There is still a lot more, depth of distribution that we need to achieve. So currently we are present in about 200 cities. That number needs to go to about 400 cities, which will itself take us about between 3 to 4 years. As far as the demand is concerned, it is coming from all parts, at least across all these 13 states.
Yes.
And as far as our strategy is concerned, we are looking at West and South, penetrating West and South more deeply initially for the first 2 years, and then making inroads into the northern markets.
Okay, very quickly, Manoj, before we let you go, NIMs are holding above that 6% odd, but cost of funds would have gone up. What's the trajectory on this, very quickly?
Cost of funds went up last year, and so we are expecting now the cost of borrowing to take a pause because looking at the trends, and looking at what RBI is saying, we are, at least this year, we are expecting that to take a pause. So the NIMs, we should be able to hold the NIMs at least for the next 2 quarters.
Okay, all right. Thanks a lot, Manoj, for stopping by and filling us in with all those details. Wishing you all the best for the remainder of the year and have a good day as well today. Well, let's slip into a short break. Up next, Anuj Singhal will be joining to give us a quick trade setup. And after that, we'll also get you picks for the day from our technical and F&O experts.
Okay, welcome back. There is, 14 minutes to go for the pre-open session. So let's bring in Anuj with how he's looking at things and the things he's watching. You know, yesterday Anuj was pointing out the rise in these almost penny stocks, but not penny anymore. And I don't mean that in any derogatory way, but the rise in some of these names has been interesting to watch. But Anuj, what's on your radar today?
Morning, Prashant. Thanks. Well, first of all, to all our viewers, happy Raksha Bandhan. And I mean, if you have a sister, then you know you are the luckiest person in the world. And to all the sisters, happy Raksha Bandhan. And it's really a big festival for me personally and for all of us. So greetings on that. It's been a festive season, of course, for all of us here. Coming to the market, I think it's going to test some big levels today. It's, of course, the Nifty that is going to test the falling 20-day moving average of 19,452. The Bank Nifty is already above the 20-day moving average. It's going to test the 50-day moving average from where it reversed, by the way, last time. So that's important. My sense is Nifty IT is the strongest index, and given what's happened overnight, that is one index to track, and it's headed towards its 52-week highs. How things have changed. That's the strongest index in the market right now. And even the mid-cap and small-cap, while we keep talking about the fact that it's getting a bit euphoric, but there's a good chance that today you hit all-time high for both mid-caps and small-cap. One big risk for the market from here, though, would be populism. Like we've just heard about this move on LPG. Now, you may argue it may not percolate down to petrol and diesel, but you never know. And going forward, I think that's a bit of a risk for the market. So overnight, the way dollar and bond yield have tumbled, that's good news for the emerging market. The US economy is cooling, which means the September hike should not happen. There would be pause in September, and that's good news. My sense is today you'll have a field day for IT stocks. They're going to lead the market today, and large cap, mid cap, whichever IT stock you pick, there's a good chance that today you would see a big rally in these stocks. Coming to the Nifty's outlook, today's trade is about seeing whether the gap up sustains or not, especially around the 20-day moving average, because there's no trade after the big gap up. There's a resistance at 19,430, which is options based, and bigger resistance is 19,452, the 20-day moving average. If it sustains above 19,452, then I think you can see some short covering. Otherwise, maybe some decline. But Nifty today is likely to outperform Bank Nifty because of the IT factor. That's my base case today.
Okay, Anuj, happy Raksha Bandhan to you as well. Your sister is definitely lucky. She has 3 brothers, right?
Absolutely.
So
we are the 3 luckiest brothers. So, I would say this. And, I believe in changing the tradition. This Raksha Bandhan tradition is that the sister ties Rakhi and says that, my brothers will protect me. I can tell you, my sister has protected me. She's younger than me, but she is my closest friend. She's really been there for me when I needed her the most. And, she has protected me. I have not done anything to protect her,
even Prashant wants to change the tradition because he wants the gift rather than the other way around.
I told you, Sonia. I told you.
Very progressive of you, by the way. Well, happy Raksha Bandhan to everyone celebrating. Thanks, Anuj, for joining in. Mitesh Thakkar and Sudarshan Sukhani are also with us, to talk about the market. So, gentlemen, morning to both of you. Sudarshan, let me begin with you. Looks like the market is, sort of going to get a leg up. But is it enough? Are these triggers enough to take the market out of the trading range? That's the million-dollar question, right? Your thoughts?
Yeah, good morning. You're quite right. Whether it will go out of the trading range, and frankly, Sonia, it's difficult to say. But what is easier is all of last week, I was saying there is no trade. Markets are very choppy. And from this Monday onwards, I said 19,250 is a stop loss. There is some sense that we are pausing around 19,300, so we should go long. That was the view for Monday, Tuesday, and today, Wednesday. The same view remains. We should try to go long because the markets are at least giving some signs of support around 19,300. Now, whether that holds or not, whether that is enough to push it above the trading range resistance is for the market to decide. But the trader must be on the long side today. Your stops can be raised to 19,300. And that applies even despite the Bank Nifty's, say, little lackluster performance. It's on the verge of a breakout, the Bank Nifty. So really, you want to be a buy on dips buyer in both the indices today.
Okay, all right, got that. Thanks, Sudarshan, for that. Well, Mitesh, coming across to you, how are you viewing market action today?
Morning, Nigel. I think, I've been maintaining that indices will contract and consolidate, and that view still remains. But within that range, I think with the SGX suggesting a good open up, and as Anuj was also highlighting, I think a couple of IT names looking good, we could see the market slightly inch up and head towards the upper end of the range, which is first pivot is somewhere around 19,450, but the eventual range is closer to about 19,600, 650 zones. The key here would be Bank Nifty. I'm penciling in a first trading target of around 45,050. If we start getting past that, you will see more strength come to the Bank Nifty, and then we'll look at 45,500 as the target. But for the short term, which is 1-2 day basis, I have a slightly positive bias. Eventually, overall, I think it still remains a range-bound market.
Okay, overall range-bound market. So since there's nothing much happening on the headline index, let's talk about individual stocks. So there's a lot of talk about how these. You don't want to call them low-quality stocks, but questionable stocks are rallying quite a bit. Would that, ring the alarm bells for you in the broader markets? Is that a sign of caution? And how would you approach individual stocks then?
Actually, Sonia, I never go out of that Nifty 200 list, the FNO stocks, so I don't look at anything else. So for me, that's always a sign of caution. It's not just today. You can get far more returns and with much less risk if you focus only on the FNO stocks that are the cream of the market. But yes, to answer your question, the very fact that some of the, say, low cap stocks are running away is a warning bell. I think that warning bell is well sounded, and please be careful.
Okay.
Your
trades, Sudarshan? Morning.
Oh, yeah, sorry. Bajaj Auto is a buying opportunity. The stock had a big decline. Now it's consolidating for the last 3 weeks. It's on the verge of a breakout. Buy with a stop under 45.75. Canfin Home, after that big decline, has actually gone into a small, narrow range. That's very attractive. Sometimes narrow ranges lead to big moves on the upside. So it's a buy with a stop under 725. My only intraday short is Godrej Consumer Products. It's very messy chart, falling. So it's an intraday short with a stop above 1030. And my final, again, is a buy, NTPC, where a bullish head and shoulder after a big rally is being constructed. That's very interesting. It's a consolidation pattern. Buy with a stop under 214.
Okay. Mitesh, what about you?
I have an all-buy list as well. Berger Paints made a fresh swing high and Asian Paints gave an intraday reversal. So between the two, I've chosen Asian Paints. Keep a stop at 32.64, 33.30, 33.35 should be the trading target. Voltas had a very strong price and volume action. So that's a buy with a stop at 8.37 for targets of 8.75. A buy on Steel Authority with a stop at 87 for a trading target of 91.5. And Navin Fluorine is something which has come on the radar as well. That's a buy with a stop below 45.95 for targets of 47.
Mitesh, just two names, actually one stock and another sector. One is Gokuldas Exports, which was locked up. I mean, rarely do we see a textile company, an acquisition and then huge volumes. Stock was limit up. I mean, how are the charts looking there? And the other is this entire chemical space, which rallied, right? Smaller companies, larger companies, but there was a bit of a move between 3 and 5-6%. So how's that looking?
Just for me?
Yeah, that's for you, Mitesh.
Okay. So one, I think, on Gokuldas Export, I think there's a longer term chart which is, giving signs of a trend on the upside. We have been positive on the stock for some time now. Yesterday was, of course, 20% move up. But I've been penciling in Prashant targets of around 850 to about 900 on the long-term chart. So I think the stock is well on its way to achieve that. If somebody has the stock, hold it with the stop at 640 and look for targets of around 850, 900, and then we'll take a call from there. And fresh buying, I think, after this rally is not advised. But on textile stocks in general, I think, I don't have a very wide coverage on those stocks, so difficult to comment. But Gokuldas Export is something which I like about.
The other one was chemicals, Deepak Nitride, there was Sudarshan Chemical, Bodil Chemical, these amine stocks, Balaji, Alkyl, all these were doing well yesterday after a long time. So anything there stood out?
See, I have been liking Navin Fluorine and Deepak Nitride. I think both these stocks, I have, if you look at for the last 1.5 years of charts, they haven't done much, but they've been forming contracting patterns. We've got first signals of some sort of expansion developing on the medium to longer term charts. So I think Deepak Nitride, if it starts getting past 2250, expect a test of 2700 plus level. So very positive over there. And Navin Fluorine is something which I've covered. But again, the targets on the medium term charts would be very, very aggressive over here. And on an extension basis, I'm looking at a 5100 kind of a target.
All right. Thanks a lot for that, Mitesh. By the way, that large trade on Zomato has gotten done. 10 crore shares have changed hands. We'll talk more about that in a bit. We'll come back in, after a short break. We'll have the pre-opening rates. Also, Ranjit Sirumala of IIFL will join in to put the spotlight on the chemical sector. Stay tuned.
Okay, welcome back. Let's just take a quick look at the pre-open, which should be coming up in about a minute. So let's just give it a minute, 2 minutes. Rajesh Palvia is with us of Axis Securities. Rajesh, good to have you with us here. I mean, in terms of the F&O setup, how are things looking and what would you recommend viewers do today?
Good morning, Prashant. So both the indices have witnessed short covering action in the previous session, and Nifty is comfortably now holding above 19,300 level, and Bank Nifty also scaled up to the level of 44,500. So looking at the near-term setup, we do believe that furthermore upside momentum can be there in day one or two. So we are projecting target for Nifty around 19,440 to 19,460 in this continuation of this pullback which we are seeing in the market. To play this up move, we are initiating here to buy a call option of 19,350 strike that was closed at around 51 rupees for this expiry. And we are projecting target of 100 to 110 for this call option, and one can keep a stop loss of 25 to buy this call option. So both indices and broader market is clearly indicating that this recovery can extend for the next couple of trading session, and Nifty can attempt to move further higher. And Bank Nifty, we are expecting that this rally can extend towards 44,800 to 45,000. So one can hold their long position for Bank Nifty also with stop loss of 44,200. So setup for both indices are on the bullish side. On the stocks front, the first stock which we like that is from automobile space, and TVS Motor is looking quite impressive. Stock managed to give breakout of its last 7-8 days consolidation range, and stock is comfortably holding above all its near-term, short-term moving averages. So we expect target for TVS Motor towards 1430, 1440. One can buy with stop loss of 1350. The other stock that we like from the real estate space, that is Godrej Property. Most of the real estate stocks have done well in last couple of trading session, and buying interest was there in the previous session. So Godrej Property is looking attractive. One can buy this stock for upside target of 1680 to 1700. Keep stop loss of 1610. And the third stock is from agrochemical theme was playing out, and chemical stocks have done well. So Aarti Industry is looking very promising. After a corrective move, stock has recovered from its oversold trajectory. The kind of short covering which we have seen in the previous session, we believe that this stock can continue furthermore upside towards 500 to 510. So Aarti Industry is buy with stop loss of 465.
Okay, thanks a lot for that. Let's take a quick look at the pre-opening rates now, up almost about 65 odd points, looking pretty good. Looks like it's going to be a good start. Zomato is up about 4.5% on the back of that block deal. It's likely to be SoftBank that has sold over 10 crore shares in the company, which is a stake of a little over 1.17% that has been offloaded by SoftBank. The important bit is the kind of demand that there is for the Zomato stock. And, HSBC as well came out with that note where they said that they valued Blinkit at $5 billion, and the hyper-local segment is something that can see a big pickup for them. So Zomato is really the stock of the moment. But let's go across to Vivek now. He's going to tell us about the momentumizer stock of the day. Vivek, over to you.
Well, good morning. So the stock that's come on our radar is BHEL. Now, this particular stock has been continuously gaining for the last two trading sessions. In fact, up almost 9% in just the last 2 days. The stock is technically comfortably trading above the 50, 100 as well as the 200 DMA. And just in the last 1 year, the stock has almost doubled. In fact, it's up 95%. So what's actually driving the stock higher? It's largely on the back of the fact that the company is enjoying very large order inflows, and this is after a while where the company did not get such large inflows. So in just the last week, the company has, number one, received an order from NHPC. This particular order is worth over 2,240 crore. The other one is for Mahan Thermal Project, where the order is worth over 4,000 crore. So almost 6,200 crores worth of order in just the last week. Q1 results weren't so good, weak execution, but what was the highlight as far as Q1 results were concerned? Very strong order inflows, 15,600 crore, and order book now stands in excess of 1 lakh crore. So markets are liking the incremental opportunities, especially in the power space that we are seeing as far as BHEL is concerned.
Okay, all right. Thanks a lot for that, Vivek. Prakash, what do you make of this one? BHEL, multi-year highs. Vivek says it's feeling the momentum. Your view on the stock?
Well, certainly. I think it's kind of made a significant comeback. Almost, you said 95% in a year is remarkable for a company that hasn't done much all these years previously. And it actually is a very clear representation of the upbeat capex cycle that we see. We've seen capital goods do so well all across. There was no reason why BHEL would not get its share of glory. But from here, if you look at the valuations and look at their capability to churn, to actually throw up bigger surprises on the revenue and profitability, they could be a bit of limited this thing. I mean, I would still focus on some of the miners in the PSU stocks rather than the equipment suppliers, given the kind of strength that we have and the kind of pressure that is going to be there to increase efficiency. So Coal India, NBCC, I mean, these are names which even a smaller MOIL for that matter. So look at that. That's a cycle which is probably going to be much more favorable than some of these PSU cap goods players, because probably the good part is already done where they stand at this point in time, right?
Okay, thanks a lot, Prakash, for joining in. We have the pre-opening rates that have kicked in right now. So looks like the market is going to open strong, 80 points higher now on the index. So we'll focus more on that later. But one segment that has done very well lately is the chemical space. Now, despite the rise in chemical prices, the demand has not risen as much in the domestic and the export markets. But it's interesting that the stock prices have risen. So let's find out more. Ranjit Sirumala, who's the Vice President Research, Agri-Chemicals and Midcaps at IIFL, joins us now with the call on the chemical sector. Ranjit, thanks a lot for joining in. First, if you can tell us, why are the stock prices rising so much? Is there a pickup in demand? And from your coverage universe, the stocks that you track, where is their maximum potential, both in terms of valuation and growth?
Yeah, thank you. Good morning, all. What we have noted is that there has been a rally in the chemical prices over the last few weeks, and that was more prominent over the last 1 week. We note that this is backed by a bit of lesser aggression by the Chinese player. What we have seen over the last few months, Chinese market has always been difficult to predict how they behave. They have cut prices significantly from March, April. And over the last 1 week or 15 days, we have seen a bit of lesser aggression. And that is what has led to a bit of recovery of sorts in the chemical prices. But at the same time, the checks do indicate that this is not backed by the volume recovery, and to that extent, the demand remains a bit of subdued, and it's difficult to kind of predict whether these kind of a rally is sustainable. We believe that the companies that are exposed to these bulk chemicals is what have reacted to this price rise in the chemical.
All right. Hi, Ranjit. Good morning. Good to have you on the show today. Ranjit, prices have moved up, and yesterday stock prices as well moved up. But otherwise,
Right.
It's still a far cry away from the recent peaks. Your view on the stocks at current valuations, and also demand has not yet picked up. So by when are you penciling in some kind of demand pickup?
Yeah, so we have recently concluded the earnings season. Both we have tracked the domestic and the global, and the commentary across the board has been that there has been a destocking phenomena, and most of the managements have indicated that it would last for at least for next couple of quarters. So December is what we are expecting a bit of green shoots to start getting visible, and then from the 4Q of FY20 onwards, there is an expectation that the demand would start recovering. The destocking has begun. It's been just a couple of quarters. That should see through for the next couple of more quarters. And that's where we will see a bit of more pain, probably that the companies might have to go through. This looks to be a bit of more transitionary as this point of time. And we are keeping our eyes on when that volumes would kind of start recovering. So if you look at most of the street has kind of a cut-off estimates for FY24, but we are still penciling in recovery in the FY25. So we haven't cut much on the FY25 estimates. From the valuation perspective, if you look at, there has been a bit of healthy corrections in the bulk chemical space, and that is what we have seen in the last 10-15 days. There has been a recovery in those names. But on the spec chem side, we haven't yet seen any meaningful correction. So there we have seen a bit of growth getting removed, probably at a 35 times multiple has now come down to 30 times. So we await a better entry point for the specialty chemical names. We do feel that there would be a point in the next couple of quarters, we would be able to get a better entry points in these names.
So, that was the question that I had for you, that if valuations are looking a little attractive now, what is in the coverage universe, which are the stocks where you're keeping an eye out on, where perhaps you could buy, maybe not now since you're expecting better entry points over the next 6 months or so?
These we have been highlighting that India as an outsourcing destination continues to attract more and more outsourcing. So the likes of SRFs, the ones which have got into the contracted business, the spec chem side, I don't want to name any specific companies at this point, but clearly there are the set of companies that are largely focused on the contract manufacturing that should do well over the next 3 to 5 years period.
So, which names, sorry, Ranjit? What are your top ideas?
Yeah, so I have been having this view that the valuations are not yet comforting, though there has been a bit of fraud that has got removed, but they are not yet in a buying zone. But at a right attractive point, we will definitely look at companies like SRF.
You cover other agrochemical names as well, Ranjit?
Yeah, I do cover. We have a coverage on.
Right. Very briefly, this new emerging story, which is getting more and more traction, is of course, shortfall and rainfall, right? Which is in August has been very, very severe, and I think the overall season is also some 9-10% deficit now. What does it mean for agrochemical companies? Are there any implications?
So when you talk about agrochemicals, there are largely in the 3 buckets. If you want to discuss on the domestic agchem companies, what we have seen is that there has been a channel push from 1Q to 2Q. So 2Q should definitely be a better quarter for the companies that have an exposure to the domestic market, the Indian market. And 2Q, second quarter has always been the liquidation quarter. So to that extent, what we have seen in the earlier part of this quarter, there has been a healthy liquidation that has picked up. But August definitely, as you highlighted, has been a bit of a dry spell, and that momentum has kind of a slowdown. For the exports market, the CSM side is what is still doing well. And for companies like UPL, which has a global exposure, I think the 3Q and 4Q is what's going to be the key quarter for them. And for that, it's a bit too early to take a call.
Okay, all right, we'll let you go on that note. Thanks a lot, Ranjit, for joining in. We have a market to track as well, so let's get back to that. Looks like it's going to be a solid opening for the market today. 90 points higher. Sudarshan and Mitesh are back with us. So let's get some calls in. Sudarshan, what's the big call at 9:10?
Well, NTPC is a buy with a stop under 214.
Okay, and Mitesh, how about you?
We go with a buy on Asian Paints for targets of 33.30.
All right, let's talk about some individual stocks then. ABB India is one of the stocks on our radar this morning. Vivek is here to tell us why he's watching that one. Vivek.
Well, good morning. A very interesting note from UBS today on ABB. UBS calls it their top industrial pick. Target price quite steep at 5,400 rupees a share. What they're saying is that, they recently interacted with the top management of the company and the top leadership team to understand the broad sectoral trends. And according to them, here are the key takeaways. Number one, they say that ABB now has a total addressable market of close to $11 to $12 billion, of which almost 75% is just from the motion electrification segment alone. Number two, what they're saying is that even within the conventional sector, the customers now are focusing a lot of their free cash flow that they're generating towards efficiency as well as energy transition, positive for ABB. And lastly, what they're saying is that emerging sectors like data center, mobility and renewable energy investments are leading the market growth for ABB. So now what UBS says is that the profit pool expansion is now driven by 3 factors: addition in new target segments, productivity arbitrage, as well as expanding the reach, number 1 to tier 2, as well as tier 3 cities. So what UBS says is that the approach to structural growth is something that is more comprehensive and more bottom line centric than it was earlier.
Okay, thanks a lot for that. Well, Hero MotoCorp is the other one in focus this morning. There is a problem of plenty now in the premium motorcycle space. Hero has launched another premium motorcycle yesterday, which is the Charisma XMR. And there it is. I mean, of course, Charisma was a great brand, right? It had lost its vigor a little bit, but now they're back, and there you have it, their brand ambassador, bright and shiny. But 1.73 lakhs is the starting price, ex-showroom. The important bit is that the pricing is slightly premium compared to some of the competing models. And Hero is going big in the premium category. This is the second launch after the Harley X440 as well. A lot of brokerages have mixed views actually. Citi maintains a buy on the stock, while UBS reiterates a sell on the stock with a price target of 2650. Now, Citi has a buy with a target price of 3,600 on the stock. Now, UBS says while the premium segment is doing pretty well, the commuter segment, which is about 75 to 80% of Hero's volumes, is still struggling. And there they're losing market share. That is the big problem pocket. But otherwise, the premium segment for the company is picking up quite a bit of pace. But any thoughts on that one? You have now a long list of bikes that you can buy.
The Charisma was a beautiful bike. Back in the day, I mean, it was a very nice bike. It was
I don't know why it lost its vigor, though.
I remember riding to Pune once on the Charisma. Beautiful, nice black bike. Took me all the way, and normally almost 95% of my rides have only been on a Royal Enfield. But for that ride, I recall, Charisma. It was a dream bike actually at that time.
Okay, so
I remember the cost attached to it as well. But anyways, those are the days.
Okay, those are the days. 15 seconds left. We'll discuss bikes in greater detail once the market opens. But for now, looks like it's going to be a good opening, a strong opening this morning. 90 points higher on the Nifty. The sensex up about 235 odd points. There you have it, the first tick on the index. It's well in the green actually, 80 points higher now. The Nifty holding on to 19,400. So positive global cues is something that has taken the markets higher this morning. It's led by Tech Mahindra, which is up about 1%. Hindalco, Tata Steel, HCL Tech. In fact, a lot of the IT stocks are doing well. HCL Tech, Infosys, TCS, LTI, Mindtree and Tech Mahindra are all in the green right now. This month has not been too bad. I mean, in the month of August alone, Tech Mahindra is up about 10%. So, gaining ground over there in this space. Apart from that, banks are also participating. So today, both legs, IT and banks, are participating in the up move. Axis Bank is up about 0.5%. A couple of others from the banking space, not too bad either. And then you have some of the steel names, Tata Steel. So it's a secular move on the upside. HDFC Bank is also up in the green. Bajaj Finserv, Britannia, SBI Life, a couple of other gainers. On the losing end, BPCL is down about 1% in the news there. Power Grid, Adani Ports, HUL sideways really. Nothing alarming, but just about, holding around the 25-20 level for HUL. But give and take everything, it's a very strong opening for the market. Let's see if it holds, because that's the important bit. The market has been volatile in the last few days. The advance decline ratio is well in favor of the advances as well. Strong opening.
Well, that's right. Strong opening, Sonia. And SBFC Finance, the first test that it's given, so-called first set of numbers post-listing. And it's come out with flying colors. That stock, in fact, is up close to around 5% in trade. Suzlon continues to move from circuit to circuit. Massive volumes, though. That's up close to around 5% approximately. Zomato, that's the stock of the day. Shares being sold. Yes, it was a bit of an overhang, but it's being lapped up. So the street likes it. That's why the stock is up close to around 4%. A couple of other notable names, Jio Financial Services. Yesterday, it was traded for majority of the day, not hitting a circuit. But towards the end of the session, it hit circuit. So now we need that 2-day gap for it to exit the Nifty. For the time being, we still have 51 stocks on the Nifty. Today, it's holding high with a gain of close to around 4%. If it goes to circuit, then yet again, the 2-day gap will start from tomorrow. So keep an eye on Jio Financial Services as well. It's doing the Nifty good, though. It's pulling up the Nifty by close to around 9 to around 10 points odd. IRB Infra, that's the other big winner. That's up close to around 4% as we speak. So pretty good going out there. And Religare as well is higher. Religare Finvest, that's what the article suggests. They have approached RBI for PCA removal. So maybe that's another piece of news that's exciting the stock. It was a little bit higher in initial trade. Now it's actually tapered off. It's as flat as can be. Prashant.
Well, Nigel, we basically almost got to the 20-day moving average. So the average is, we're at about 19,430. And as of yesterday's close, the 20-day for the Nifty came in at 19,452. Yeah, so we're basically just under it. Let's see if we're able to cross it. That's the first kind of hurdle on a technical basis, which the market needs to take out. So a few other names before we go any further. Gokuldas Exports is up another 10%. So, that's again a huge volume-led name. I was sort of talking about this with Mitesh earlier. And that's straight off the bat, another 10% on the back of large volumes. That's the important point. Zomato and Jio Financial Services we already mentioned. Suzlon we did mention. Mahindra Life is coming up with about a 7% pop. Stocks at about 574. We don't see that these kind of volumes in a stock like Mahindra Life spaces early on, but it is showing up today. What else? There is Godrej. Not Godrej Properties. Bodil Chemicals is coming up with a 4.5% pop. Just trying to see if these chemical stocks are once again rallying. So some of them seem to be. So IOL is up about 3%. Bodil is up about 4.5%. Ami Organics not exactly doesn't exactly fit that characterization, but 4.5% there. 1376. Spark is up about 5.5 odd percent. There is Lodha, which is up about 2%, 2.5 odd percent. There is Surya Roshni, which is up 4.5%. I'll have to go down the list. PG Electroplast was a big mover yesterday. That is up another 4% this morning. There was, of course, that big block deal which had happened. But that is another one which is coming up with decent gains at this stage.
I just want to mention PVR Inox as well. Yet again, fresh high on that one. It's almost at 1,800 rupees now, PVR Inox. And you know, in the weekend gone by, you had the success of Jailer, there was Gadar 2, and there was Oh My God 2, together 100 crores. So the 100 crore weekends are back, and hence, you know, some of these stocks rallying quite a bit.
Just one data point on Suzlon. It's at the highest level we have seen since August 2015. Almost 26 rupees. Who would have thought?
I mean, tells you quite the kind of market that we are in. And of course, I mean, you know, we had the management with us occasionally over the last 6 months or so, regularly. And the business also seems to be turning around, and they've got a decent sized order book, etc. You know, on PVR, so I just like to say that I read somewhere that globally, the guys the studio which produced Batman, the Batman trilogy, they're going to re-releasing it in theaters. Wow. So I'm checking with PVR if they're going to come to India, and I think it's going to be another blockbuster. So I don't know.
There's so much demand for, you know, movies right now. I mean, it's crazy.
It's going to be very great. And they're going to be a big one if that does happen, if that's re-released in theaters. Well, so that's, you know, PVR for you. Market, by the way, holding on so far, at least at the opening levels, 80 points, 19,425. Anand Shah is head of PMS and AIF investments at ICICI Pru AMC. Anand, good to have you with us here. Pleasure speaking to you after a while. Anand, how are things looking? All okay on the small cap, mid cap front? You know, I looked at valuations for the mid cap index 1 year forward. This was about a week ago. We are trading at about 23 times 1 year forward earnings. The last time we peaked, which was in 2021, that number was about 35 times. So relative to its own history, valuations are not very high. But many are pointing to the convergence of valuation between large caps and mid caps and small caps, and how that perhaps is a bit of a problem. Historically, it does not last. So just wanted your thoughts there.
Indeed, very good morning. Pleasure to be on CNBC. I think you're right, damn right, that, you know, while the values are at new high, the valuations are not. And before I jump into mid cap and small cap, when we talk broadly about the markets, yes, since October 21, when the market peaked last, and now, obviously the PE multiples have come off, which tells that, you know, there's something underlying in terms of earnings growth, which is pushing the market up, and it's not so much of a sentiment-driven rally as generally one would want to worry about. So I think that to that extent, yes, the positive is that it's backed by earnings. Further, if I were to go one step forward, the breadth, even in your opening remarks, you know, we are not talking about only consumption now. We're talking about manufacturing, we're talking about utilities, we're talking about capital goods. So I think the other good news in the markets today, notwithstanding that the valuations can be a challenge and sharp rally can be a challenge, but I think it's more broad-based. So I think the earnings recovery is not in the specific consumption segment, but it's more broad-based across utilities, cap goods, manufacturing, and obvious consumption continues to grow.
A lot of consumption stocks actually have hit new highs this morning. So let's just take note of that. Kalyan Jewellers is at a fresh 52-week high as we speak, up almost about 2% today. And it's been a 90% rise for Kalyan Jewellers this year. Phenomenal move there. TVS Motor is at a fresh 52-week high as well. Berger Paints is at a fresh 52-week high. And of course, PVR Inox, we've spoken about that. So consumption definitely is the theme across sectors. Anand, hi, good morning. You know, I was going through your PMS contra strategy, and one of your top 15 holdings is L&T. And that stock has come out of a very long lull, right? A multi-year lull. It's been one of the big performers this year. Do you think this is the start of a multi-year upcycle in capital goods and manufacturing companies, not just L&T, but even in the broader markets?
Many of those businesses that we have in those portfolios have actually had a very difficult decade. And this is something we have spoken before, that the markets are very different pre-2020 and post-2020. When we used to discuss markets pre-2020, there used to be those rhetoric stocks. There used to be only specific segments of the market which used to do well. while a very large part of the economy, large part of the market is struggle in terms of leverage, in terms of profitability. What has changed in last 3 years is a lot of these stressed sectors have deleveraged significantly. The earnings have improved. The China plus one, to some extent Europe plus one is playing out, where the manufacturing entities in the country which has survived are getting new markets, new demand, and to that extent utilization is going up, profitability is improving, and that combination of utilization going up and leverage coming off, and banks have also now speak and span in terms of quality. I think we are talking of a new capex cycle. Again, we've been waiting for it. It's been many of false starts before, but I think we are very close to having the private sector capex cycle at last kicking off, given the utilization is higher, profitability is higher, and leverage is fairly low. So yeah, that's a good news for cap goods in general, L&T in particular. Yeah, it works out from a medium to long-term perspective. Again, I think investors need to be cautious at this point of time because there has been very sharp rally. Nigel also asked about, Prashant asked about mid-cap and small-cap, where we have again seen very sharp rally. So I think one needs to be careful. From here on, I would want to believe it is a marathon and not a sprint. I think we had a very, very fabulous last 3 years where a lot of money was made in a very short period of time. But one has to be very careful at these valuations. And one needs to understand it's a marathon from here and not a sprint.
Hi, Anand. Good morning. Anand, I wanted to ask you about a couple of spaces where you have some exposure and you've got it bang on. The defense space, some of these themes out there. HAL, that theme has played out very, very well. But at current reckoning, what's your view on the stocks? Have they ran a little bit ahead of themselves in the near term?
Indeed, I think we've been struggling now to continue to justify to own more of them. There has been a significant re-rating that has happened in defense companies in general. No doubt, the news flows continue to be strong, not only from India's own defense spending, which is growing. On top of it, we are doing more indigenization. So, Atmanirbhar is making sure that the defense companies in India can grow faster than the budgets at which our defense budget is going up. And most recently, I think we are seeing in some of the companies, we are getting exports orders from friendly countries. So I think it's in for a long haul. But again, as I was just saying, that yes, many of these businesses are discounting a lot of good news. And unfortunately, either you have a good news or a good price. So if you have a lot of good news, then one needs to be very careful that you might not have a good price. Typically, the best time to invest when there is a lot of pessimism, which is not the case.
Okay, the best time to invest is when there's a lot of pessimism. Got that. You have a lot of exposure to the financial space, of course, names like ICICI Bank, HDFC Bank, etc. But even some of these home finance companies, whether it's Repco Home, you have Muthoot Finance on your list as well. There's Bank of Baroda from the PSU space. I'm talking about your contra fund again. This is a space that has had diverse reactions. I mean, HDFC Bank has been a big underperformer of late. What do you do at a time like this?
Indeed, again, financials will remain the most leveraged sector in the country, and to that extent, they will have higher beta both when the economy is doing very well on the way up, but also when the economy is doing badly. We've seen it between 2013 to 2020 when we had a series of challenges in the domestic economy, particularly manufacturing and infra sector, which led to NPAs coming through, and banks had to make significant provision. I think from here, and especially last 3 years and maybe a couple of years ahead, we believe the credit quality continues to remain benign. A lot of cleanup has happened. A lot of stress testing has happened. You can imagine there was a demon, there was a GST, there was the NBFC crisis. Then obviously the slowdown in 2019 and the 2020-2021 where the COVID wave 1 and COVID wave 2. So I think the banks have stress tested. Their asset quality today looks fairly strong, and that would continue to support the earnings growth rate, while NIMs can the net interest margins can come off a bit from a very high levels that we have seen in FY23. I think we remain optimistic that they being the most leveraged to the economy, and since our outlook on economy remains constructive, we believe banks can continue to do that.
Banks can continue to do well. Anand, I mean, actually look at PG Electroplast, if you can put that stock up. It's up another 8%, 2,100. I mean, it's like a rocket ship. 40% this month so far. From this space, Anand, what is the best bet, sort of putting valuation considerations also on the table? Or you think it's all kind of run up and you just throw up your hands and say, well, I missed it, and wait for meaningful dips? Or you think these are still buyable?
No, I think this is a sub-segment of manufacturing. While we remain constructive on overall manufacturing doing well, India, apart from growing exports, will also have to do a lot of import substitution, particularly in electronic space, in white goods. We still import a lot of stuff. We have few companies in our small cap portfolios which are into electronics manufacturing, and we had quite a few IPOs more recently also, which have had a good response from the market. So I think it's an emerging sector, and to that extent, the growth is good. We don't have to even expect the domestic consumption growth for that, given there is a lot of import substitution opportunity. So even at the same consumption levels, in some of these segments, we can have growth because of import substitution. So yes, the growth is good. You're bang on when you're saying that the stocks have run up too sharply recently. The valuations are demanding. And to that extent, I come back to my first point being, if you want to incrementally invest in markets in general, some of the stocks in specific, you have to be in for a long haul. The short term can be difficult.
All right, we'll leave it at that, Anand. Appreciate your thoughts here. PG Electroplast, one of the big movers, right? Look at that chart, 130% in the last 12 months. But for the market, it's really picking up pace now. And the good part is, after an initially positive opening, the market is building onto its gains. So it's not letting go of that, gap up opening just yet. Now the Nifty is well above that 19,400 mark. But good time to take a breather from the index itself and talk to some corporates. Dr. Lal PathLabs is the next corporate we're tracking today. This entire space has been through so much competition. It's been through some wealth erosion as well on the markets. The non-COVID revenue, though, has seen a good growth, both sequentially and year-on-year. Realizations have also seen a steady growth. Om Manchanda, the managing director of Dr. Lal PathLabs, joins us now to discuss their business momentum. Mr. Manchanda, it's always great speaking to you because apart from your own business, you give us a pretty good sense of how things are on the ground. So I want to start with that, right? I mean, there is so much competition nowadays in this space because of not just, brick and mortar companies, but also health tech has become the new buzzword. There's so much funding that's coming through as well. I want to understand from you how the situation is on the ground for a company like yours. And what is, do you think that there could be some more pressure before things pick up?
Good morning. I think interesting question that you ask. In my view, there's nothing called health tech versus traditional business model. I think they are both together. The technology piece is basically the enabler in improving the service levels to our customers. So I think the legacy companies or incumbents, actually, they have caught up quite a bit on the technology side. So I think we are as good as any other new age player. Our teams have done a wonderful job. I think that's true for the entire industry. So to my mind, it's more like a hybrid sort of a situation where the new age companies have to move offline and offline companies have to actually adopt online as well. So I think today we have a situation where most of the large players are actually hybrid format. And I think the second part of your comment essentially was how is the competition shaping up? And I think, in my view, the diagnostics so far has been a pretty much very large city urban phenomena. And I think the second phase for this industry growth is going to come from down the pop strata, which is basically moving to tier 3, tier 4 towns. So I think this industry will definitely have a long runway.
Okay, so that's on the health tech side, got it. But even hospitals, right? Hospitals are getting very aggressive now in terms of testing, diagnostics, etc. Is that a big hindrance to growth for you?
I think it's fairly natural for any health player to figure out is that which are the adjacencies for them. I think it's very natural for hospitals to see that how they can capture the sort of a diagnostics business, especially flowing out of OPD in their nearby catchment areas. But I've always believed that, expanding beyond that is a different business altogether. It's a highly logistics-driven business, which in my view, some of these players may not be used to that kind of operations. And I think the biggest challenge that I would see in hospital business is the pricing inside the hospital is very, very different than what retail pathology is all about. I think we are yet to see that conflict or the friction that is going to exist between outside and inside business, because many of these players have not yet scaled up to that level where the conflict becomes visible.
Okay. Good morning, Doctor. Thanks so much for speaking to us here. There are two variables that we look at normally, the volumes as well as on pricing. So have you managed to push through any kind of price increases? And for the year, that's for FY24, what kind of volume growth are you guiding for?
If you recall, we took price increase in the month of February, which essentially belonged to the previous financial year. And we are seeing some impact of that. I think we've already mentioned about 2 to 3% of our top line growth or revenue growth is on account of price increase. And we usually are not very regular in price increases. This increase also we took after many years. So I think we'll wait and watch as to how it moves. On the volume front, I think the current quarter is generally the highest quarter in the industry because of fever season. And we are seeing some gradual pickup on volume as well.
Not the best thing to hear, but, in terms of fever season, but good to know that volumes at least are going up. Swash Breath, that one has been doing very, very well, and that's been a big growth driver, right, for you? You're already clocking more than 100 crores on a quarterly basis. I think you're guiding for close to around 500 crores. What's the ideal contribution you're looking at from this particular vertical, and how do you see it scaling up from here on?
I think this is one sort of a change in consumer behavior that I've noticed, especially during and post-COVID times. And test sort of prescription pattern is moving towards bundle tests. And I think that is seen not only by us, but I think entire industry. So which is in some way, it's a great news for all stakeholders because patients, first of all, get great value for money because if you look at price per test, it's much, much lower than ordering individual tests. So I do see that contribution from bundle tests will continue to go up. For us, it is done very well. And as you rightly mentioned, we are now clocking exit rate of between 400 to 500 CR or something like that.
Dr. Manchanda, good morning, Prashant here. Sorry, to the earlier point, this is a bit of a stretch, but humor me and would love your response. August has been very dry, right? Across, there have been some sort of states which have been exceptionally dry. And this is a season where because of rainfall, etc., hospitals, and I don't know about diagnostic chains, but I remember hospitals have told us that this is the busy season for them. But because August is dry and the forecast for September also perhaps is not very good, maybe you will see a slight drop-off. I mean, can we make that kind of same leap for diagnostic companies as well, like you?
Yeah, I think the monsoon pattern has been very unusual. We saw very heavy rains, I think late June and early July. And after that, it's been dry. And probably I'm probably not in a position to really comment on this, how September would pan out. My sense is it's a combination of humidity and the temperature and many other things. Probably I'm not a medical person, so probably I won't be able to comment how the trajectory of disease pattern would be. But I think September is a very important month for us to watch out.
This seasonal business, I'm assuming comes at a bit of a higher margin as well. At least for hospitals, it does. I mean, is that true for you as well?
It's essentially because of leverage, because you don't have increase in cost, but you have a higher revenue. And in our business, I don't know about hospitals. In our business, variable costs are very low, like reagent costs just about 20-25%. So most of the higher increase in revenue just flows through the bottom line. That's what happens.
What about the suburban business? Suburban diagnostics, the volume growth has been slightly on the muted side. I think in Q1 there was not too much volume growth, but the margins have been slightly steady. Can you tell us a little bit about what kind of growth are you looking at over there?
On Suburban, we've actually just entered into phase 2 of our integration, where we are trying to look at synergy between the parent company as well as the Suburban Diagnostics. And we are looking at both synergy on the front end as well. We have been a little more active on the ground in terms of marketing initiatives in the last couple of months, and also trying to see if we can collapse the testing between the two companies and see that there's a cost advantage. I think early days yet, but I'm fairly confident that Suburban as an asset would do very well for us.
Just coming back to the earlier answer to Nigel's question on pricing, right? You spoke about that, but I think it begs a little more understanding because of what's happening in the industry. I mean, there's a steep pricing action that we've seen from NetMeds, for example. They're trying to strengthen their presence in this whole Delhi NCR region. And that escalates a threat for a company like yours. I mean, it's sort of like become like a battlefield, this entire diagnostic space now. I'm sure it's not been easy for incumbent players like yourself, but on pricing itself, do you think things could be tricky for a while?
Not really. See, I've been long enough in this industry. I think one thing one must realize that healthcare is a very, very trust-driven space. It's not that you and I go to a doctor or a hospital or somebody else just because the lowest price. But I do agree that you can't be outpriced as well. So I think you just need to figure out is that what is the kind of premium you can charge over your nearest competitor. And this industry also, you will see that if you go deeper, you will not see a national pricing. So you will not see a price, what you see in one city A and then same price in city B. In my mind, I think what is very, very important is to focus on that you continue to deliver on your core proposition, which is just the quality, and people should trust in the reports that you deliver. I think the rest will follow, because if you run the company efficiently, you always have the ability to price it well. Yes, I think in the past we've faced competition which has been on a cash burn and deep discounting. I think many of those players, they know that they can't sustain it. They are going to catch up with us. But I think in my mantra is just focus on quality and run the company efficiently. You will be able to price it well.
All right, final question before we let you go then. You're sitting on some cash, and inorganic growth is something that the street expects for the sector on the whole. Are you all on the prowl, and could we expect some kind of a closure of any deal, say, in the next couple of quarters?
Yes, I think time and again I have mentioned that growth pillars for us are both inorganic and inorganic. And if you now look at the sort of a distribution pattern of our business, I think we've plugged the gap of West to some extent. South does exist as a gap area for us. We will continue to look for sort of a great sort of asset. To my mind, I think right now I have nothing to share, but it's a stated strategy for us to go inorganic as well. And we will definitely use our internal accruals to take that forward.
All right, Mr. Manchanda, it's always great speaking with you, more to understand what's happening in the industry, and it's a pleasant conversation that we have. Thanks a lot for joining in and speaking to CNBC TV18. That's Dr. Lal PathLabs talking about all things diagnostic, their own business, and of course competition in this space, which has picked up drastically over the last 1 year. Let's slip into a quick break. On the other side, we'll get you excerpts of an exclusive conversation that our colleague Mangalam had with Hina Nagarajan, who's the new MD and CEO of Diageo India, on our show CNBC TV18 Weekender, coming up in a bit. Okay, let's talk about some drinks now. In a conversation that our colleague Mangalam had with Hina Nagarajan, the MD and CEO of Diageo India, she says that the industry will see a slower volume growth but more value growth. So it was quite a candid conversation that we had on CNBC TV18's Weekender show. She talked about the business opportunities, how they see the growth going forward. Listen in.
So premiumization is here to stay, and just like every other FMCG company is experiencing, our industry is seeing that, and actually we are delighted because we do want people to drink better, not more. So that's why you see the industry looking slower on volume growth, but value looks much better, right? And that is where the future profit pool is going to lie. If you just look at the demographic dividend that you were talking about, if you just look at the new cohorts that are emerging, affluent, high net worth individuals, women as a cohort. If you look at the aspiration levels in boom towns, I think we are estimating double-digit growth at the premium end for the next decade or so.
The next decade or so. And does that mean higher margins as well? Because mid-teens is what you've been talking about. Mathematically speaking, you can't go a lot beyond mid-teens, largely because a part of your portfolio is capped with the 10%. Does that happen? Or structurally they stay around the mid-teens or at best high teens?
So I think the reason, Mangalam, why we've stuck to the mid to high teens is exactly this.
Right.
Like one of the things is the price regulation, right? And there is ongoing advocacy to at least get us to an inflation-linked formula, right? I mean, even drugs get that, right? So we will continue that advocacy. In the absence of that, I think the mid to high teens is a very good goal to go for.
Recently, what happened in Karnataka? How much has that impacted your volumes?
It has impacted brand MRPs by about 5 to 17%, depending on where you are on the price ladder. It's coincided with the Shravan slowdown, right? So very difficult to say how much pricing is playing a role and how much just the seasonality is playing a role. But in general, we would expect the volumes to slow down.
There is an Adhik Mas, which is 2 Shravans put together. So could that impact your second quarter volumes along with Karnataka?
It could, difficult to say. It could impact. It normally does. But we also think the rebound will happen, in time for season. I mean, season is our peak selling period, right? So I expect that the rebound could come quite fast.
So that doesn't impact your full year guidance of double-digit revenue growth?
No, we are sticking to our guidance.
A lot of state elections that we are going to see going forward as well in the next 18 months and a central election coming by as well. With this policy, a lot of freebies coming in and then the alcohol industry being taxed for that, do you think there is a risk for this to become, commonplace going forward as we go into many elections?
Look, Mangalam, elections are always very tough for our industry around the world.
Yeah.
Okay, but it is also business as usual for us. I mean, we go through elections every few years, right? The fact is that we are also very strong contributors to the state revenue. So there is a balance. I think the states recognize that, right? We know how to navigate these. And I think we just focus on what we can control, which is, catering to the consumer needs, giving them the best offerings, and, driving efficiency through our value chain to be able to fund, to grow our brands, and be able to deliver our guidance.
Let's not take away from the positives of the regulatory environment as well. One is that the legal industry is gaining more traction. The second is that there is the likelihood of the UK-India free trade agreement. What have you heard on it, and what would be the benefit for you?
The impact is difficult to say because it depends on how much duty reduction. It depends on the phasing of it. It also depends on, what happens with the state excise, in the light of this, because, that is a central reduction. It's a smaller part of the value chain. If the state governments did not try and make that up in some form or the other through other taxes, then we anticipate that the benefit could be 5 to 15% depending on how much reduction happens on the MRP. And of course, it will be an impetus for volume gains.
Speaking about another positive aspect of the regulatory environment, Maharashtra, where the duties were cut, what kind of consumer behavior did you see after that?
Definitely, there was an increase in existing volumes. Maharashtra was one of the highest priced markets for, bottled in origin scotch, for instance, right? So the moment the duties came down, people just started buying from the state, which helps the state revenue and the state's coffers, right? So there was a volume uplift. There was a volume uplift of 10 to 15% at least. And actually that has happened state after state. So, Delhi prior to the route to market change had dropped volumes. We saw a huge increase in volume. West Bengal did the same. And we saw an uplift in volume there as well. And it actually is a win-win for both the industry and the government.
So what about Telangana? When do you expect a price hike coming out there, and when do you see your margins go back, gross margins go back to the 44-45% range?
Right, Telangana is a bit of a balance. It's gone a bit up and down. We have again ongoing discussions with Telangana. Really, I can't comment on when they will. But I'm hopeful because we have seen, as you said, we have seen positive progressive policy rollout in a number of states, right?
Remember you saying that you're pretty excited about Baileys coming to India and the potential that Baileys has, largely because of the sweet tooth that Indians have.
We were in a conference, I think it was only 2-3 weeks ago. And I was asking them, just tell me what is the size of only the organized desserts, the packaged desserts market in India. Can you guess that number?
What would be 27,000 crores or something?
It's going to be 27,000 crores in the next 5 years.
Yes, I remember doing that show on the chocolate market. So
yeah, exactly.
Yeah.
27,000 crores. Bailey's is sitting right up there, right? Anything that is sweet, Bailey's is, that is the target market for Bailey's, right? So for me, Bailey's can be huge Mangalam. I mean, I couldn't even hazard a guess of where this brand can go. We are starting. We brought more variants in. There's a strawberries and cream which has come in. There's a salted caramel Baileys. By the way, I know you're a teetotaler, but you should try.
Yeah, these things are sounding pretty tempting.
They are very, very good, right? So we are starting that journey. And I do think that 5 years later, we would be saying that it is one of the leading brands in our portfolio. It's
a smooth highway with a few speed bumps or maybe traffic signals?
Yeah, definitely. I think we are now very much focused on the consumer and the journey. Future back lens, where is this market headed? What should we bring next? I mean, there are new exciting categories that we are testing, right? We are testing Guinness, more and more popular. I mean, so many Indians travel to the UK, they've tasted Guinness there. So we are seeding it. It is working well. Tequila is a category which has just about started in India, right? It is gaining some traction, particularly in the metros. And this is a category that could go the gin way. We've got so much more exciting innovation, renovation to bring into this country. We are just focused on that. I mean, we are past, bulk of our legacy issues, right?
Delicious conversation. And remember, you can catch the entire conversation today at 3:30 p.m. only on CNBC-TV18.
Strawberries and cream,
Bailey's. Difficult to come back to the market
and that's
after
interesting.
That, no? All right, well, let's turn our attention back to the markets and let's focus on a couple of other names. NBCC, well, that's a stock on our radar. The company has bagged a work order of around 66 crore rupees from the Indian Medical Association, which will be executed over a period of the next 30 months or so. In other news, NBCC, as well as the Delhi Metro, will work together on infra development projects. Well, Mr. Pawan Kumar Gupta, the chairman and MD of NBCC, joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, I think this is your final month in charge out here. But tell us, good couple of order wins. So what is the, margin trajectory of this and how do you see execution, the last couple of big orders that you won?
No, margins are okay. We'll be getting 8% PMC fees on this order. So all the orders that we are getting, they are with the decent margins. And we have immediately taken up the execution and planning of this project. A kickoff meeting with client has already been held. And we are in the process of finding consultants and preparation of design drawings and tender documents for execution. We got a number of orders recently, totaling around 3,500 crore till now in this current year. And many big orders are in pipeline, and we hope that within the month of September we are able to get them. One of them is the construction of balance FAR of Amrapali project that will fetch an order of around 8,000 crore for NBCC.
Oh, that's a big order. So you're saying that there's a big order pipeline and you're expecting to bag an order of close to 8,000 crores. Is that correct, in the month of September?
Yes.
Oh, that's a lot.
So that's, I think your overall projections for the year is 9,000 crores in terms of revenues, and you're saying 8,000 crores will come from Amrapali project. Is it, it's over how many years?
This will be an order, this will take around 2.5 years for execution.
Okay. So this is the Amrapali project from which 8,000 crores will come over 2 to 2.5 years, correct?
2.5 years, yes.
Okay. And what are the other projects in the pipeline and what's the quantum?
There are many projects in pipeline. We are in touch with the Kerala government for redevelopment of their property. We are in touch, in fact, Delhi Transport Corporation, we have already got the order that is in the stage of tendering, and work will be awarded soon. Recently, we signed an MOU with Delhi Metro for doing the construction works together, where we will do the building works and they will do the railway line work on the project for as well as in India. So many more orders are in pipeline.
And what's the quantum of the Delhi Metro project?
Delhi Metro project doesn't have a fixed quantum. Only thing is that whenever we bid in future for project, we'll be doing the building work, they'll be doing the railway work. That is the strategy. both will be working in their core area of competence.
Okay. All right. Mr. Gupta, the street will be listening in to you very, very carefully because now the company's market capitalization is more than 9,000 crores odd. And at best, maybe, the profit number for this year could be in the vicinity of close to around 500 crores. So a couple of questions there. Your real estate monetization, I think you had a very large, ambitious target. How much have you achieved in this year? And for the remainder of this year, what kind of real estate monetization you're looking at? Give us the quantum.
We have a very big, our flagship project, World Trade Center, Nauroji Nagar, where the sale value is around 12,500. So we have been able to sell 7,200 worth crore of property till now, and in this year around 1,200 crore. And another 3-4 months, we are hopeful of winding up this property, and complete sale will be done. We are in touch with many clients for the purchase of this property. And second one is the Amrapali project, where we had to sell around 5,600 number of houses. And we have already sold 3,700 houses, and daily around 40-50 houses we are selling. Another 3-4 months we'll be able to wind up that project also, as far as marketing is concerned.
Got it. So this Nauroji Nagar as well as Amrapali, could you tell us what is the quantum, just one number, the real estate monetization between these two?
In World Trade Center, the further monetization will be around 5,500 crore. And in Amrapali, it's already 2,000 worth crore of property has been sold, and another 1,000 crore worth of property will be sold in next 3-4 months.
Okay,
Maybe.
so that is about the domestic market. Tell us a little bit about exports as well. You're making an entry into the Maldivian, the African markets as well. What is the quantum of orders that you're looking at? How big is the opportunity for you?
The Maldives are already executing a work of social housing of 2,000 number of houses. The total revenue from this project will be around 1,000 crore. 300 crore worth of work has been executed, and another 700 crore worth of work will be executed in the current financial year and next financial year. This project is being done on fast track, and very shortly, Honorable President of Maldives will launch the project so this has to be sold by Government of Maldives in open market. So Honorable President will launch the project very shortly. Maybe
and for the African market?
We have been awarded a work of construction of Chancery and other buildings by Ministry of External Affairs in Seychelles. That project will take off very shortly. That is already awarded. And we are in Burundi, we have got a work of construction of parliament and ministerial buildings. There will be getting around $2.34 million as PMC fees. And many more projects in Mauritius, they are already under construction. And our hospital subsidiary has recently got a work of hospital in Mauritius that will be taking off shortly. So Mauritius, Maldives, Seychelles, Burundi, these are the countries where we are already working.
Okay. All right, Mr. Gupta, final question then before we let you go. Steady state, what kind of margins will you look at? Once you get, say, to a ballpark 12,000 crores of revenues, I'm not including the other income. The operating EBITDA margins, what will it be?
EBITDA will be in the order of 4%.
4%. When you hit a revenue of close to 12,000 crores for this year? Standalone plus your subsidiaries together?
We have a target of 10,650 crore as per our MOU signed with our ministry, which is a standard practice for all PSUs. So we'll cross that target definitely, maybe around 11,000 and something between 11 and 12,000.
Okay, all right. Well, thanks so much, Mr. Gupta, for stopping by and giving us all those details. You're sounding fairly optimistic. The street as well as optimistic explains why the stock has had a big run in the last couple of months. Wishing you all the best as we speak as well. The stock moves to the high point of the day. A quick word on Jio Financial Services has hit that upper circuit yet again. So that cooling off period starts from tomorrow now, if in case it has to exit, the index. So just keep an eye out on that. The last few sessions, it's been hitting the upper circuit. The exchange filing states that it has to have a break of 2 days before exiting the Nifty as well.
Just a few other names, Nigel. So, Gokuldas, of course, we've been pointing out. But look at Spark, that is Sun Pharma Advanced Research, that is up 10% on very large volumes. Maybe we can put that up, 251. Deepak Fertilizer was not there earlier when we looked at stocks. Deepak Fertilizer is up about 5%. Stocks at about 612, that is Spark. Deepak Fertilizer should come up. Atul Auto, right? It took a break yesterday, but what a month it has been having. So 50% this month, by the way, as we wrap up this August. So that's a 52%, counting today's 7.5% move. Bodil Chemical and a few of these smaller chemical companies are participating, but nothing to the extent that we saw yesterday. Maybe things will pick up a little bit more later on. So that's the broad kind of lay of the land. BEML saw a very sharp up move yesterday. BEML is down 2.5% on some volumes. So keep an eye out on that as well. And Spandana, Texmaco Rail are some of the others which are correcting somewhat, but nothing large. Overwhelmingly, more advances as compared to declines is what we have. Mitesh is with us. Mitesh, morning. We started higher and just kind of holding, not building on it. So some selling emerging at high levels, but on the Nifty at least, what would you do?
I think it's not a bad outcome, to be very honest. I think Nifty holding around these levels. My initial feeling is that if we can remain above 19,400, looking at the hourly and the 2-hourly charts, if we can remain above 19,400 during the day, which is only about 30-35 points lower from here, then I think we should once again make an attempt to go to 19,560 and even 19,680. So stay positive, 19,400 or just maybe 5 points below that, it should be a stop loss. Even if you want to enter afresh, I think that's the level which I'll watch. And it's okay. I think we had a big gap up opening from yesterday, and we haven't turned negative. But the intraday indicators at least are now pointing on the upside, suggesting that as the day progresses, there is a stronger possibility of us going up than going down, and therefore 19,400 or 395 should act as your stop loss. On the stock side, TVS Motor, and I think autos are having a very good day. TVS Motors is a buy with a stop at 1390 for targets of 1465. And M&M is something that has come on radar as well. M&M is a buy with a stop below 1560 for targets of 1625.
Okay, Mitesh, thanks a lot for that. That's on the market, which, by the way, is looking pretty strong at the moment. So the Midcap Index is really where all the action is. The party continues there. Let's do one thing. Let's take a quick break. On the other side, we'll shift focus to the commodity markets. Manisha Gupta will be with us. We'll also talk about some stocks that are on the move. Stay tuned. Welcome back. Well, shifting focus to the commodity markets now. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, festivities begin officially today with Raksha Bandhan, and we have seen the gold and silver demand expected to start picking up. If you look at the prices in the international markets also, we are trading at 3-week highs for the gold prices, and prices actually have hit a record high in case of Japanese yen, but that's because of the currency and not because of the demand really. The kind of decline that we've seen in various Asian currencies, gold has inched up quite strongly there. So when you look at this year itself, we've seen 18% of gains in gold in Japanese yen. It's up 6.5% in US dollar, and because of rupee depreciation, we've seen gold prices gain up by nearly 8% for us as well in this year itself. The markets are looking at the weakness in US dollar index as it is. It's come below 104. That has been supportive. Also, the treasury yields have come off its multi-year highs. Also, the CME Fed Watch now suggests that there is an 86% probability that the Fed will leave rates unchanged in the month of September, and that clearly has led to buying coming in for that space. For silver as well, it has been about the China stimulus hope. Remember, silver is part industrial metal as well, and that segment also seems to be doing quite well. So whether it's about copper, zinc, aluminum, nickel, we are trading at multi-week highs onto these one as well. And in last 1 week, we've gained between 1 to 3% for many of these industrial metals. That in turn seems to be supporting silver as well. I also want to take you to the speculative positions that we've seen here. So in case of gold, we've seen longs gain up by 8,000, while shorts have increased positions by 12,000 contracts there. So the net here has been outflow. That also shows in the sense in the previous week where we have seen a big number come in sense of outflows in from gold. The ETFs have seen some redemption come in as well, and that seems to be weighing on. For silver as well, when you look at the speculative positions here, it has seen net longs gain up by nearly 4,000, while shorts have gone down by 3,000. So there is better buying in silver than in gold is what we've seen, and that shows in case of prices also. Most importantly, for this week now, it is going to be about the US personal consumption numbers that come in tomorrow. The second quarter GDP revision comes in today, and then you have the most important non-farm payroll data that comes in on Friday. So it's a loaded week going forward.
All right, Manisha, thanks very much for that. That's commodities in focus. Well, CNBC-TV18 News break confirmed over 3% stake in Zomato sold this week after share lock-in ended. Nisha has been following the story. She reported this earlier as well, giving us a heads up. Nisha, tell us more.
Thanks for that. Yes, this morning SoftBank has sold 1.17% stake in Zomato. Remember that it held 3.35% stake, so still currently owns about 2% stake in the company. Now they have sold it for 947 crore rupees at value of 94 rupees 70 paise per share. Remember the implied value at which SoftBank had been given Zomato shares as part of the Blinkit transaction last year was at around 70 rupees 70 paise per share. So it's a good amount of profit of 24 rupees per share price that SoftBank has gained out of it. And remember, the lock-in ended last week, which we had alerted. And after that, we have this week till now already seen over 3% stake in Zomato being sold because of the shares being unlocked. So SoftBank is today. But we had seen our Tiger Global exit its position completely in Zomato with 1.7% stake earlier. And also another investor had sold 0.4%. Remember that SoftBank's remaining stake is locked in for 45 days, and all this is really turning into the lock-in period ending for some of the investors. But the new investors are coming in, and the stock is euphoric because HSBC has upgraded the stock to 120 rupees per share, right now trending over around 100 rupees per share, and that is adding a lot of euphoria despite the supply of paper that is coming in on this particular counter.
Okay, thanks a lot for that. Zomato holding high, up almost about 5% odd. So much demand for that stock in the market post SoftBank exiting, not exiting, but selling 1.1% stake. Thanks, Nisha, for that. Well, let's move on to Sonal now. She has some oil marketing companies on her radar. Sonal, over to you.
Thank you so much for that. Well, the LPG price cut is all everyone can talk about. It has been cut by 200 rupees per cylinder, both for the Ujjwala and non-Ujjwala customers. Now, sources have told Sapna, because it talks about subsidy as well, that compensation or subsidy will not be required by OMCs on this 200 rupee price cut that has been taken on LPG. And government subsidy will be available and will be limited only to 75 lakh new Ujjwala connections that the government spoke about in its press release yesterday. Now that takes us to the fact, how will it impact all the oil marketing companies who are actually the sellers of LPG? Now, if the compensation is not given, it will reduce their buffer. What would that mean? That they already have over-recoveries as per the Q1 data. As per Kotak estimates, in their marketing segment, their auto fuel over-recoveries were around 24,000 to 25,000 crore rupees. But if subsidy is not given, of course, that will deplete as well. Now, HPCL, that is the biggest loser in the OMC pack. It is because they have the highest exposure in the marketing segment. Their EBITDA contribution is around 56%. But of course, we don't know whether compensation will be given or not. It could be delayed as well. But even if it's delayed, it could be a negative for the companies. Because remember, earlier, government had given 22,000 crore rupee compensation for LPG to all the 3 oil marketing companies. That was back in 2022. Now, analysts had indicated earlier, whenever we get in the period of state elections, earnings expectations for OMC should be toned down. So this could just be the start. And that's why we are putting spotlight on the oil marketing companies.
All right, so over-recovery is probably the only sector where we hear that word, right? I mean, actually even under-recoveries. Thanks very much. That's oil marketing companies. SBFC, Small Business Finance, that's the one which we are focusing on. Stock's up. It's only the 11th or 12th day for the stock in the markets. Abhishek, numbers look good?
Well, the numbers look good. First results after listing. Q1 FY24 has been a healthy quarter for the company. So disbursements are up 32% YOY and about 3.6% quarter-on-quarter. AUM growth is much better at about 47% YOY and about 7.8% quarter-on-quarter. Disbursement to AUM ratio for an SME financer at 58% looks slightly on the elevated side. Gross NPA has improved down by 3 basis points to 2.54%. Net interest margin has come down by 40 basis points both YOY and quarter-on-quarter. However, the spreads have improved both YOY and quarter-on-quarter. So spreads are at 7.63% when compared to 7.5% in the same quarter last year and about 7.56% in the previous quarter. The NII, that's up about 44.5% YOY and about 4.5% sequentially. Lower provisions and other income has aided the PAT this time around as well. So PAT is up 46.5% YOY and close to 10% sequentially. Back to you.
All right, thanks a lot for that. That's SBFC Finance. Big 6% rally there. Let's step into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Harish Damodaran, the agriculture editor of Indian Express, and Vijay Sethia, the former president of the All India Rice Exporters Association, to assess the impact of the weak monsoon on the agricultural sector.